Hello everyone, it's Irfan Ali Moladina with RMI Professional Corporation once again. Today I want to touch on a topic about investments and more specifically investments through your corporation. So a lot of times I have clients who come to me and they're continually asking, I've got some extra money, what should I do with it? How should I invest it? Should I pull it out personally from my corporation and invest it personally? And there's a few different answers to everything. So what I want to do is first touch on what my personal strategy is when it comes to investments. And everyone's probably heard about having a diversified stock portfolio or having diversified investments, as they always say. But my belief is you have to have diversified investments by not only having a stock portfolio, but having different investments. So some of the ones that I'm familiar with and some that we've recommended to our clients is real estate options. Whether you're buying property, whether you're lending for second mortgages, whether you're having partnerships, commercial, residential, lots of different options in that space for sure. I've seen some lending options as well where you can get a percentage return on money that you're lending, whether it's short-term or long-term. Sometimes it's secured with assets, other times it might not be, depending on the rate of return you're receiving. And of course, you've always got the option of investing in stocks as well, which many people are familiar with, and you can use a broker for that. You can invest yourself, you can do it personally, you can do it through a corporation as well. Lots of different options on that end. And the last big one is you can invest in other corporations, private companies. So sometimes people are looking for angel investors, or there's a nice startup concept, or you can get in early on a business. Those ones tend to be a lot higher risk. So for sure you want to keep that as maybe a small part of your portfolio once you have some excess cash. So there are different options, of course, when it comes to investing. And what I wanted to touch on now is the concept of investing personally or through a corporation and what the difference is. So of course, when you're investing personally, everything goes to your personal income. Now, many of you have been watching my videos, you'll know I'm not a big believer of having a very high personal income because you get taxed at a higher rate on the personal side. So the more money we can shelter, the deductions and we can take to minimize your personal income is going to benefit you in tax savings. So a lot of times when we have a small business, I'll say we can invest through the small business or through a holding company more specifically, which will allow you to actually invest the money after only paying the small business corporate tax rates. Now, this isn't always the case, so it's always important to talk to a tax professional before you make a decision. But if you are going to invest through the corporation, what people will then tend to ask is, what's my taxes going to look like? And what happens is if you're earning passive income through a corporation, it does get taxed at a higher rate. But what happens is when you actually take that income personally as a dividend, then the company gets a deduction back for those extra taxes it has paid to bring you back to a relatively similar tax rate to whether you're paying business or personal, whether you're investing that way. Where the benefit comes in on the corporate side is it gives you more after-tax dollars that you can actually invest in, whether it's the stock market or real estate project or whatever investment strategy you use. So once again, it's Irfan Ali Moladina with RMI Professional Corporation. And when you're looking at your investment strategies, make sure you talk to a tax professional first. And we're always here to help if you ever have any other questions. Thank you.